counting today. I was like, how long have I been quarantined? I'm like, 10 days. 10 days.
Yeah, and I think we're going well into April too, to be honest.
I know. It's ridiculous. I mean, as long as it like halts it and it.
Yeah. I mean,
It,
yeah, and I think we're going well into April.
oh yeah, sorry. That was the live stream.
Oh, I was like, wait,
Like,
what?
wait, why is my voice coming back at me? Right. Oh my goodness. What else has been going on?
Nothing. I mean, we've been speaking to a lot of our portfolio companies, specifically about, I guess, what we're going to talk about today, and how to think about that, and just trying to help people stay calm and navigate and realize, we'll come out of this. But other than that, I actually started like visual development. So I'm actually like working on building a product right now. We'll see how that looks in a couple months. Yeah.
That's dope.
So yeah, just trying to be as useful as possible during this time.
That's good.
Yeah.
I think everyone's trying to do their part right now, which is cool. I think like the good thing that's been coming out of this is the fact that I feel like we're just being better humans.
Yeah, I would agree. I mean, when everyone's taking it seriously now.
Yeah, exactly. Exactly. So that's the one thing. Actually, I saw someone post the other day, like, what are you hopeful about? Which was cool. And I'm just like, I'm hopeful because I feel like, humans are being taught a lesson of being better to each other and our world in general. Oh, what is that noise? Hold on real quick. Oh, it's my Zoom reminder. Okay. All right. Ooh. It's going to be a great discussion. I'm excited.
Yeah.
Oh, let me go back to my Zoom. Hello. Hi, Shane. Shane,
Hi.
what time is it right now for you? Shane is in Dubai.
Oh, wow.
She's in our cohort 2 right now, and she's a killer founder. Actually, I hyped you up to him before. I just didn't tell him name.
Hi, Ivan. Lovely to meet you. I'm okay to keep my video on because normally I'm in my pajamas with my hair everywhere because it's like 3 a.m.
Yeah. Oh, wow. Yeah. Didn't think about that. How are you doing?
Good, thanks. And yourself?
Doing all right. Hopefully just trying to make it through all this safe and healthy and making sure I check in on everyone. I know.
Thank you for making the time for us.
Yeah.
It's surreal here because as of 8 p.m. tonight, we're on total lockdown until 8 p.m. Sunday. Oof. If we go out, we risk being imprisoned.
Wow. Jeez, really? So it's prison in Dubai if you go out?
Well, it's in prison in Dubai for most things if you do anything wrong. It works for me because I don't break the law, so we're good.
Yeah, you do not. I'm going to do a quick poll here to ask of you on the line how many of you have raised capital before we get started. Hey, Cheryl, how you doing, girl?
Hey, love. I'm doing okay. Hey, everyone. Thank you so much for being here.
Yes. Okay. We're going to ask who has raised capital. And then we'll give people a little bit of time. We already did this.
Alex, it might be better to do it in the participants where we all raise hands if we have, then you'll be able to see.
You know what? Boom. Shane, that's right here. Yes, please raise your hand in the participants if you have raised capital already. So then we have a better gauge of how we need to break stuff down. Nice. Oh, hey, Tunde. Hey, Nasa. Also, Nasa Mishler is on the line. I'm going to hype her up. She's cohort 1 queen who just did an amazing partnership, her first partnership for her company with Walmart. And their first product is a disaster relief marketplace for people affected by Corona.
Oh, did you post that yesterday?
Yeah, that's Nasa. She's on the line.
Oh, hi, Nasa. That's fantastic. I actually shared it with a couple of friends because I was like, this is like tangible things that you could do like right now.
Right now.
And it would make a difference. So
exactly.
Thank you.
Yeah.
It's been a week.
Yeah, I can imagine.
She has been working on this partnership for a while, and she finally closed it at the right time. At the right time. Awesome. Well, I'm going to get started because I know there's people that will trickle in over the next few minutes. But thank you all for being here today. I'm excited about this conversation, especially because in the Get Shit Done community, we have a lot of people who have raised capital or about to raise capital, and these are questions that are top of mind. Just as a reminder, if you have a question during the conversation, because we have some guided questions that we want to ask these folks, please make sure to put it in the comments. So if you don't want to forget it, you're like, oh, it's top of mind, I don't want to forget this, put it in the comments. And then when we come open it up for question and answers, just to streamline it, because there's going to be quite a few people, then we'll come back to it and then we'll do it in order. But then afterwards, once we get through questions, you can chime in with your questions as well. And I'll actually just call you up to ask your question to these folks. And yes, we will kick it off here. So it looks like we have, okay, a couple of you have raised capital already. But I'm excited. These amazing humans are two of my friends. They're amazing. Cheryl is at Republic, and they're what are you guys calling it now? Crowd investing, not crowdfunding. Crowd
exactly. A whole new field, the intersection between angel investing and crowdfunding.
Yeah.
So I think Tunde on the line likes to call it micro angel investing. So, or retail investing, whatever you want to call it. Yeah. We're an investment platform. So that's what we are.
Yes. And then Cheryl, what's your role there?
So I am now head of growth and partnerships, which is exciting.
She does everything.
I try, but essentially I was previously part of the investment team from associate all the way through principal, and now essentially I'm focused on this building and executing on a strategy that allows us to really become part of their public ecosystem as a value add driver. So whether it's through partnering with VCs, accelerators to help their portfolio companies, or whether it's working internally and supporting our portfolio companies, we're doing it all to really just foster growth.
Amazing. And Yvonne, AKA my twinsy, he has his own fund. So Yvonne, tell us about yourself. Tell us about your fund.
Yeah. Hey, everyone. Thanks for joining us. So I'm the co-founder and managing partner of a fund called New Age Capital, which was founded in 2016 with my partner. We are a seed stage focused fund that invests in Black and Latino led technology startups here in the US. Industry agnostic, sector agnostic. We focus on what we call founders solving real world problems. So we actually were able to raise our first fund from a VC firm called Lightspeed Venture Partners back in 2018. Invested in 12 companies, and actually started fundraising for our second fund closer to the end of last year, and are actually in the middle of fundraising now, which has been an interesting time, but has allowed us to kind of double down on what we're doing, because we think the opportunity is going to be bigger coming out of this situation. So in the interim now, what my partner and I have been doing is trying to help the community as much as possible. We obviously have been working with our portfolio companies and trying to help them navigate this time. But being that we have a little bit more time now and aren't moving around and as active, just trying to add as much value to in the ecosystem as much as we can, regardless of if founders fit our investment mandate or not.
Amazing. So let's kick this off. Thank you for your question already. Ooh, I know we're gonna get some good questions today. Thanks, Carol. So the first thing that I know has been top of mind for a lot of entrepreneurs is the responsiveness and the responses or the thought process for investors right now. So what are some things, because Yvonne, you are an investor, and Cheryl, you work very closely with investors. What are some things you're hearing behind closed doors right now from investors in regard to how they will be approaching their investment opportunities and where they actually deploy capital right now?
Yeah. So it's interesting. I mean, I've been having this conversation on a daily basis with some of our potential investors, with other VCs, and essentially we're at a point in the world right now where everything is at a standstill. No one really knows the full effects of what's going on, and until we get through testing, and probably until we get to the end of April, where we have a better idea of what's going on with COVID-19 and what the effects are, and being able to manage it before people can start making economic decisions. So essentially, from the investor side, there's two ways to look at it. One, from the actual capital side, there's a lot of what's called dry powder still left. So a lot of funds have raised a lot of capital over the last couple of years. So there are billions of dry powder essentially sitting on the sideline that need to be invested in companies. The only thing is, I'd say the one caveat to that, though, is whereas the way the market was going, it was very competitive, it was more founder friendly, and VCs were just open to kind of writing checks because we were in a bull run. Now they've kind of pulled back a little bit, and what they're really trying to assess is, within their current portfolio, what are the companies that have actual potential to survive this and can come out of this stronger. And they're starting to think about, is there an opportunity to double down on those companies, because valuations have probably reduced at this point, and they may be able to get a little bit more ownership by providing some more runway to their companies. Or are there companies that were going to start raising and that needed to raise because they were running out of capital, and they probably weren't going to make it anyway, and it definitely may not make it now. So there's those tough conversations happening. You'll see a ton of venture capitalists or investors on Twitter or publicly saying we're open for business, and we're looking for new investments, reach out. That's true with a caveat. So no one's making any real new investments in the next, honestly, like 6 months. I think if you have a really strong company that may actually be benefiting from this, you can look at it as like, there may be a 1 quarter kind of wait in the market, and then you can really start having those conversations and potentially close around in late summer and the fall. If it's a business that's directly positively impacted by COVID-19, so whether that's some healthcare or like work productivity tools. But other than that, you should look at it as like, before you can have any real meaningful conversations with investors that are going to be writing checks, it's going to be a 6 to 9 month period. And then alongside that, looking at it from the perspective of building relationships. Everyone's home. Everyone is really just like working from home on their computers and whatnot. So take the approach of actually reaching out to all these folks. It's a lot harder to kind of, deny access to someone, or, it's easier for them to ignore. They have things going on. They have events they have to go to. They have meetings they have to go to. Now everyone's home. This is the best time to kind of build out the list of whoever it is that you're connecting with or you want to connect with, and just start building those relationships so that when you do want to raise around in the fall or in the winter, you're better prepared.
Love it. What are you hearing, Cheryl?
I think, Yvonne did a great job in terms of covering the broad strokes on the VC side. I'd say several things just along with that. One, there's, for early stage, I think what's really important is building those relationships, like Yvonne mentioned, and therefore there was like a widespread cancellation of all these meetings. I was talking to a lot of founders. They were like, I had these booked for like months, and now they've just all closed. And so what's happening, because everyone is right now in front of their computers, is that there are a ton of emails now coming in, right? So they're bombarded, response rates are going down. So I actually would tell founders to be a little bit more creative in terms of how they're reaching out. Definitely take this opportunity to find the warm intros that will get you to these people and actually have them respond. Maybe do more LinkedIn. Essentially try to figure out what's the best way to get in front of them so that you can kind of build that relationship quicker. Because right now everyone wants to be virtual. Everyone wants to be in front of everyone's faces, and I'm an extrovert, so I love that. But but at the same time, that's something that I just be cognizant of. I'd say yes, there's definitely a lot of dry powder on the VC side. However, I've definitely been speaking with those, that maybe fundraising or that relied on these capital calls, and these LPs, the people that are actually providing the capital are asking for like longer term projections, because on the other side, their assets have decreased in value through the stock market and everything, and therefore they're trying to increase the cycle time between these calls. So that's something else that I've heard on more on the VC side of what's going on. People say that in terms of overall opportunity, the valuations for founders are expected to drop around 10% by the summer. That being said, so once again, founders need to be really prepared in terms of how they go about fundraising, but it does seem like those that actually do have the dry powder on hand will be able to capitalize on that. And then last but not least, I would say, like, in terms of maybe some of the family offices, we've seen, at least Republic has like a private capital arm called Republic Labs. That's for like Series C onwards, so like it's a lot bigger opportunities and syndicates for high net worth individuals, angels, and the like. And for them, we've seen more on kind of the family office side, and just those in general, that they're slowing just activity in privates, just seeing like a wait and see approach. And it's kind of just affecting, people that might be raising this type of capital if they're more on the family office side. So yeah, that's kind of how I see it across the board on both the founder and VC perspective.
And we're done with this conversation. No, I'm just kidding. I'm like, you guys did a really good layout of this. Okay, so now we understand what's going on in the environment, what investors are thinking about. But on the side of the founder, what are those characteristics of companies? Because there are still, like, the job of investors is to deploy capital so they can get a return. And there's obviously still companies that are doing well. Like I talked to one of our founders who's in this cohort of the accelerator, and she's actually in a position where her company is actually doing the best it's ever done during this environment, which is nuts. And I'm like, now's a perfect time for you to raise, because she was like, I wasn't thinking of raising. And then now, so what are some of those tangible characteristics that investors are like, this is the type of company I would invest in right now? Because now you're having investors who might have been on the fence about a company prior to this, and maybe they were going to sway to, okay, we can take a risk on it. But if they were iffy, what I'm hearing is that it's like, absolutely not now. But what are kind of those hell yes characteristics of founder companies that investors are willing to bet on in this environment?
Right. Yeah, so I'd say there's like two sets of companies that fit that like hell yes demographic. One of them is like the companies you're talking about, where they just happen to now be able to take advantage of this opportunity, right? So whether it's healthcare companies or, there's a lot of, these on-demand or like these delivery companies that are like doing, super well right now. So things where like the direct impact of COVID-19 is going to sell your business because people need to do certain things. Is one category where those companies may not have had the most growth prior to this, or like you said, may not have been looking to raise money. Those are those opportunities where if the idea is that even out of this, there's sustainability within that growth, even if it doesn't continue on that growth path, if investors feel as though, one, they were able to take advantage of this opportunity, and once we get out of this, they're able to sustain that advantage in a way. That's one lens. I think that's a smaller pool of companies, that actually fit the mold of can actually take advantage of this opportunity. The flip side is, and this is probably where more of, I would even say, our portfolio founders fit in, which is a nice thing. But the idea of like growth right now is like a moot point. Like no one should be talking about, like this is what my growth trajectory is looking like in the next 1, 2, 3, 4, 5 years. It's all about survival. So the investors are looking for what companies are currently out there right now that either with the current runway they have or with the unit economics, they can get to profitability, but they're going to be able to survive at least the next 9 to 12 months. And they may just need a little bit more capital for after that period of time to maybe then really get ahead of the market and really start accelerating, you know, over a 24 to 36 month period. That's the other subset of companies where the founders are highly capital efficient and have always been that way, are building their companies that way. And they know now in this market how to pull back some of their expenses, whether it's, you know, unfortunately cutting back on product development and reducing, you know, product development spend and whatnot, maybe even cutting their salaries down a little bit if they can, or things where like they're tightening their belts in a way that's going to allow them to increase their runway, say 3 to 9 months. But that 3 to 9 months is really into like Q1, Q2, 2021, where the investors don't feel as though you need their money right now. That's the best case scenario that founders want to be in. Now, the truth of the matter is, if they're doing all those things, yet they still have less runway, they may still be able to raise if investors still believe in the formidability of the business. But now the investors have leverage. So founders have to look at it from the sense of the way you heard about valuations over the last 12 to 18 months, throw that out the window and now be looking to sell, you know, maybe even double the amount of your company.
You not throw it out the window.
Well, yeah, but
I mean, still leverage that a little bit.
Yeah.
They're not going to drop too much, well, as much as people think. So yes, I think you've definitely covered great. And then just to piggyback off of that, in terms of for VCs, if you really think about it, it should be really an alternative, like a class that is not as tied with the markets as everyone else. Obviously, it still is for the reasons that we've spoken about, but the fundamentals should still stay the same, right? What they're looking for, who they're backing, why they're backing them, what kind of growth they're looking at. Those things still remain the same. And so sometimes you like to, maybe it's just easy to kind of discern in these moments of challenge, what are the VCs that are actually still doing deals and which ones are not? Because those are the ones that are really like sticking through their intentions. And also, by the way, it might be in a privileged position where they already have dry powder and they already have some of their previous records where they're like leading the pack, and they're the ones that really are taking advantage of this opportunity, right? As Bon said, they have more leverage because now they can cut through all the noise and just say, hey, what's this company doing? Are they making the most out of this opportunity? Will this continue to grow? And then if so, then everything else should be fine. Then they are going to be investing definitely at a discount. So versus everyone else that have just been stopping and been kind of like kind of following on, I think is you just really get to see who are the people that stick true with what their investing fundamentals are. So I would say that like sometimes like for example, like given like the founder that you spoke about, you know, who was actually doing very well right now, it's all about seeing if they can actually sustain that growth and if they can actually then deliver on the growth metrics that VCs look for, right? Because then we can talk all about like whether or not a company should raise VC versus stay bootstrapped and, you know, do all of that. That's a separate conversation. But in that sense, if they're ready and they feel like they can capitalize on this moment now to actually inject capital when they need it, then that would make the most sense.
Yeah, I'd say my one rebuttal to what Cheryl said is still from the growth side, and I only want to speak on this because this is one of the main conversations we've had. The growth numbers you had in January, like literally throw those out the window. Like they do not exist. They're not real. No one knows how the world is going to recover in the next 12 to 18 months. So trying to pitch investors on the same numbers you had in December, they're going to look at that as like, what's wrong with you? Like you haven't been able to adapt and make that adjustment. So I would say like, while, you know, in the future, you know, you're looking at the 3 to 5 year, you still want to have those trajectories and, you know, try to be as accurate as possible about the opportunity and the growth there, but definitely discount them appropriately. And that's okay. I think the issue is everyone's trying to maintain that you know, oh, we're still going to be able to like do what we're going to do before and succeed. And like, it's just not true. Like, it's just the reality of life. Everyone's pulling back. Valuation. So we've seen valuations go down like 20 to 30% for some investors investing right now. So that's why I said that. And that's really Series A and beyond. I think seed stage is probably going to be consistent with a slight dip. There's just going to be less seed deals done at those valuations. But from the growth standpoint, like, yeah, it's more about like everyone figuring out like, how are we just going to survive the next 6 to 12 months? And then we can talk about growth, like once we get out of this.
That's a good clarifier. For the 10% thing, I meant more on the seed side. That's kind of the sweet spot that we see at the moment.
Right.
And then in terms of just the growth, I mean, like facts are facts, right? Like you can definitely present the historical. However, it's a lot more about thinking about worst case scenarios. And so it's more about presenting the different types of things that might be going on. Okay, if Corona ends up extending 6 months, this is how we're going to perform, right? Like just making it like an actual model so that you can really truly say that you've thought about this and that you're not just coming in brazen and saying everything's going to be fine in 2 seconds. That's just part of, being founder preparation. I think it's key.
I'm loving all these questions and I can't wait for us to get to them. And I love this back and forth. Yes, friends. Okay, so now that we've talked about, what are some of those characteristics, one of the things, and we've had these conversations before, is access to capital is a barrier for many. And so if you were considering, let's say, raising capital or, doing a follow-on round, having to build those relationships and going to get those coffees and those in-persons are real. That's a big part of it. So in this more virtual age, way more virtual, what are ways that founders, and you guys kind of hit on it a little earlier, but what are ways that founders who don't necessarily have access to those connections can get in front of investors when they might not be able to go out there and go to networking events and make those connections? Like, what is a great way to sign up in someone's DMs? Like, because the reality is, I know I had a privilege when I raised capital because I went to one of the top schools in the world. Like I could tap that network. That is not a reality for most people. So in your guys' opinion, from what you're seeing and then your preference, if a founder is a cold outreach, how would you want them to even approach you at this time? Even if it's not cold outreach, what would be the preferred method to make those connections with you?
Yeah, I could speak on this first then, I guess. Let me talk first about what we do this more with our portfolio companies once they're alums, and then I'll talk a little bit about just other ways that people can explore reaching out. The way that we deal with so many companies, which by the way, I didn't give the full spiel on Republic, but we actually have helped over 140 companies raise over $40 million, which is fantastic. And that's been over the past 3 years. And that's something that we, do not take for granted. So we really are doubling down, especially in this moment, to look at our portfolio companies and try to support them in the best way that we can. And that being said, what I like to do is actually recommend the investor pipeline that Jenny Fielding actually wrote about in Q4, which is actually a way to help scale the fundraising efforts of our portfolio companies. And then what essentially that is listing in Excel, like who are the VCs that you want to talk to, just ideally, right? Like you might not have a connect with them just yet, but just write them down based off of their investing thesis, where you are at the moment, what stage, how to best, just who there would also be your champion. Because once again, like VCs are complicated, VCs have politics. You really have to understand who would be your champion within that in order to get to where you needed to go. So doing your research on the actual people within that VC. And then what we do is that we take that, we kind of scope it out and see who we have connections to that we could definitely do warm intros with. And so that's one of the, the amazing things about being in a community that's supportive is that, because we are split out of AngelList, we have deep tech and VC connections on that side. And that allows us to then go ahead and actually make those connections. So that's kind of how we've been supporting them at the moment. Now, in terms of other ways that, founders can get those warm intros, I would say don't underestimate the power of Twitter. I'm very active on it now that, once again, I am isolated and an extrovert. So I'm like, how do I communicate with others? And I'm sure people are too. So definitely sliding into Twitter DMs with a meaningful message would stand out from the rest. And when I say meaningful, I would definitely not approach it as like, hey, I want money, but like, hey, this is who I am, what I'm doing, and I would love to start our conversation now. Just so, I mean, don't say like pick your brain. People don't like saying pick your brain because then it sounds like a waste of time. But definitely make it sound like you're serious, and you want to start building that relationship, because just raising money in general takes a lot of time. So definitely I would say just Twitter, but then also just making sure that, like, for those people that you've identified might be good VC champions, definitely just try to see who else you're connected to via LinkedIn. Like I'm a big LinkedIn person as well, so but viral several times back in the day. But it's something now where I'm like, once again, because everyone is at home, that's kind of my way of seeing what other people are doing as well professionally.
Yeah, I echo a lot of what Cheryl said. So I will say, not much has changed in kind of the advice we generally give people. It's just more about accelerated timelines in your outreach. So I would say, first and foremost, I'll give some resources you can check out. One is called Signal by NFX. So Signal is pretty much like a list of venture capitalists and allows you to kind of sort and filter. It happens to be pretty robust. I don't think it has everything, but it's probably one of the most robust. A platform called Crunchbase is another one that you can use, that we leverage a lot as well. And then there is an organization called Allraise that I think you can navigate it through the website, but they've put a list together of investors specifically that like have said they look to invest in underrepresented founders. And there's like little tags for them and things like that. So if you check out the Allraise website, you'll be able to get a list of investors through that as well. So I would say, and that's specifically VCs. Unfortunately, I don't have that vast of a network as to private equity investors that invest in early stage companies and things like that. But from the venture capitalist standpoint, those three platforms, you'll be able to get a pretty wide net of all the investors that are out there. As far as building those relationships, it is exceptionally hard, right now, not being able to go to events. But as Cheryl said, I would leverage your network. So as you build out your list of investors, the most important thing to do, which surprisingly a lot of people don't do, go to the company's website and like learn about like the company, the VC firm, figure out what they actually invest in, what their mission is, what their vision is, are they even aligned with you? And then specifically find the partner that probably is most aligned with the company you're building. It's not just the firm. A lot of times people think, hey, I just want to raise this money from this firm. And I just need to be connected to anyone at that firm. And that's not the best strategy. So you want to find the specific partner at a specific firm. And another way to do that a lot of times is if you're building a company in a certain vertical, figuring out what the other companies are that are similar to yours, whether it's the same type of company in another industry, whether it's a company in the same industry that's just an adjacent or a complementary product offering, where you find the lead investor that invested in that company, and because they probably would have a better idea of what you're building than anyone else, and you can leverage that. As far as the actual outreach and the communication, whether it's through DM or email, you always want to build like a thread of emotional connection, right? So we've kind of advised everyone is like, you're reaching out, like be a human first, right? So first, let people know, hey, we understand in this time, hope you and your family are doing well. Just wanted to reach out and let you know I'm working on XYZ, and if time permits, or when you have the availability, would love to explain to you more about why this company I'm building is going to change the world, or why we'll be able to take advantage of the current opportunity to really accelerate our growth. Don't just write an email that's, you should do that anyway, But, before this era, it was something more along the lines of trying to build a thread as far as if you went to the same school or, oh, I saw you invested in this company. I saw you did that. But specifically now you want to have that human empathy and let them know like, hey, I understand there's a lot going on. Even though you are an investor and looking to invest in companies, I realize you may have a family, you may have, may be married, you may have kids, you may have older parents you're taking care of and are dealing with all that right now. So I'm cognizant of that and would love to kind of get some of your time, when you're available. That's going to be extremely important, and you'll probably get a quicker response than just, hey, like, we're building this great company, like, would love to follow up. And then as far as continuing with the follow up, it's actually, I would say now is a time where it's better to follow up if you can, whether it's anywhere from 4 days to 7 days. And you can do that consistently, I think, for at least a couple months, because people will see them. If they're not responding, they may just not be interested, but it's going to be easier to get someone's attention if you're consistently following up on a regular basis now than it ever would have been in the past. So that's the one piece of advice I give there.
I love that. And we'll share out these resources that they mentioned. There's one founder in particular, and some of you might know her, Rachel Rennock from Wethos. She has some amazing, we did an interview with her, and then also amazing resources. What I like about her is she is not the stereotype of who has raised capital. If you're a woman, like over 60% have went to business school or have some type of net worth or whatnot. Rachel did not. She did not have access to any type of investors. The way she approached it was very much so what Yvonne was saying is like going to their websites, going to their Twitters, literally researching them and getting into their brains, reading their op-eds. They love Twitter. Investors love Twitter. They like hearing their voices on Twitter. They like doing their blogs. Like all these things are there to understand what they care about. And so when she would go to events, she would be able to stand out from the rest because she would approach them and say, hey, I know you have a lot of people waiting to chat with you, but I read something that I thought was really interesting. And then they would just have a conversation. And because she would pick their expertise, people like talking about things that they care about. And so by then she's like, you know what? I know there's more people that want to talk to you. I would actually love to tell you what my company's doing in this space later. And by then it's not even a conversation of I'm trying to pitch you. That person just like, wait, actually we have something in common. And if you're doing something in this space that is in alignment with what I care about, let's do it. So I think you can migrate that virtually as well. And like they're saying, what Cheryl and Yvonne are saying is being meaningful in your approach and your interaction with them. That's going to help you stand out. The next question I have is, in this environment, and you already alluded to this, Yvonne, is there's on more of the Series A side, but for these earlier stage companies, if you're pre-seed, seed, what are some ways that these founders can ensure that they're not getting too highly diluted? Because as you guys know, like you want to keep a founder motivated, and long-term, if they start out and aren't getting favorable terms, long-term, that's just not good. Because I truly believe if you put the founder first, the company and the ecosystem is in the best position. But if the terms are not favorable, everyone loses. So what are some suggestions you have for founders in this environment to prevent such dilution to the point where they kind of screw themselves later on?
Right. I'm happy you asked that. So I'm going to take it a step above that right now. And just, this is an unfortunate thing, but I want to make this super clear. And it's really important that everybody knows this. So the part of venture funding that's going to be the most impacted right now is pre-seed and seed funding. It's the earliest stage. It's the most subjective. It has the most risk. What that actually means is that the types of founders at pre-seed and seed that will be the most disproportionately negatively affected by this are underrepresented founders. Women founders, people of color founders, immigrant founders, they are going to, it's already kind of still abysmal how little funding they raise. That number is going to actually go down significantly. And it's part of the reason why we've actually kind of accelerated our fundraise, and we're actually looking to raise a bigger fund because we think the market opportunity is going to be bigger. But founders of color, women founders, and other types of underrepresented founders, unfortunately, are going to have an even more difficult time than it's been in the past actually raising capital. So what that fundamentally means is from a pre-seed standpoint, pretty much take the perspective that like I will not be able to raise any money for a product that I have not even like put an ounce of an MVP together, whether it's a website or a newsletter, so I can start generating, email addresses, or, some type of Shopify store where the product may not be built yet, but, I have mock-ups and things like that. You're going to need to show some form of a product and some traction to even consider raising capital in this market. And then even from that standpoint, trying to be as lean as possible, like really taking the like lean startup model to building an MVP. If you think, oh, I'm going to need to hire an engineer or this type of person to build out my product, look at other ways. There's a platform called Webflow, there's Squarespace, there's Shopify, where you can kind of make makeshift things to put out there. As far as even software development, there's a platform called Bubble, which is really visual programming if you're building software, where you don't need to know how to code, and you can essentially just learn how to kind of design it and through workflows, just click things together to build, data strings. So essentially anything you can do, try to do as much research as you can. If you're at the pre-seed phase where you don't have any product and you just have a great idea and you believe there's a strong market opportunity, get something out there to show that you either can get early customers, even if it's only a few, or you can build a wait list or an audience of potential customers to get to that next phase. As far as seed stage funding, so what we try to recommend to founders is try to never sell more than 20 to 25% of your company at the seed stage. And if you're going to do that, try to raise as much as you can and have that money actually be able to get you to the Series A. One of the biggest issues we generally see, and it's going to get worse in this market, is founders a lot of times will sell more than 50% of their business just to get to the Series A, or like after they've closed their Series A. So let's say it's you and two other founders, you've sold 60% of your business after you've now closed your Series A, you guys just own 40% and you're all splitting that remaining 40% on. And let's say you're going to have to raise, let's say, another round or two later, it really saps your motivation to be able to build a company because you don't own as much. So we always recommend, if you can avoid raising pre-seed, because at pre-seed, you're going to have to sell 10 to 15% of your company. If you can get through that phase on your own and go through the heartache and really hustle your way to the seed, and you can, you have the optionality to sell anywhere between 10 to 25% of your seed, depending on your traction, to get $500,000, $1 million, $2 million. That's the ideal situation you want to be in. As far as valuations go, for seed stage, they were getting into the $10 to $20 million pre-money valuation. That's not really happening anymore, even for repeat founders. The likelihood is now the ranges are looking more of like, 4 to 10 million pre-money, and to raise the same amount of capital. So if you have absolutely nothing and you don't want to do what I just said, and you're like, no, I want to have engineers, like I want to build a team, like that's what my skill set is, and I'll let them do everything, then look to sell a third of your company at the seed stage, essentially.
Yeah, those are all very valuable gems out here. So I'd say for founders, yes, this is not the best time for you, just in terms of fundraising overall, unless, once again, you're one of these breakout stars that really highlight the need for that type of company. And so I would definitely say go back to the fundamentals, try to be lean as much as possible. I think it's, once again, when all of this clears, because at some point it will clear, it just depends on how long, right? You can then show that you come out stronger and an even safer bet for them, right? Because once again, seed is risky. Investing in women and minorities apparently are, even riskier than, the status quo. So making sure that people understand that what you offer to them is a way that they will, 10x their fund, right? And just even through these times of austerity, these are the times where you really see the makings of a company and how they are going to withstand other ones in the future, because there will be other times like this, not in this, just in a similar vein, but not necessarily the same, or hopefully not, knock on wood. So in that case, definitely making sure that you see this as a sign of growth and as a sign of growth through staying lean, right? So a time where you can still show your numbers are meaningful despite, you know, all of this adversity. I will, you know, plug in Republic right here real quick, because we have on our side seen a surge of companies finally starting to take a look at Republic. So alternative funding as a way of actually, you know, being able to then determine their own valuation and discount when they do a SAFE, and overall, you know, try to keep that valuation somewhat in their favor, so that when they, you know, get the marketing and the fundraising from the actual campaign, they can leverage, they can up their metrics and then have better leverage when it comes to the next round, right? So we have 400,000 investors on the platform, and we have a curated process in terms of figuring out which startups are the ones that are essentially going to IPO or get acquired in the future. That's our hope for every single portfolio company. And so for them, they don't, obviously it's not egregious, like they can't just choose any valuation and like discount. We make sure that it's in vein with what, or like in line with what they previously have raised. And so for us, it's really about making sure that these companies do take some ownership back and actually provide the terms that they need and offer it to the crowd, so that the crowd can rally behind these businesses and actually go and invest in them, while, you know, VCs might be struggling in that department, so that when everything passes, then they're able to come up on top.
Oh, good. I love it. I'm going to open it up for questions, and we're going to start from the comments. If you have not put something in the comments yet, just raise your hand. And then once we go through the questions that have already been posted, we'll get to you. Carol, do you want to step up and ask your question? Please unmute yourself and show your face too.
Yes. One second.
Isolation, but we don't
yes, here I am in New Jersey. Yes. Okay, so thank you. This is, thank you, Alex. Thank you, Yvonne. Thank you, Cheryl. Cheryl, I sort of know you, but now I know you a lot better. This is wonderful. So my question was really how to optimize Republic right now. I know that you're making some adjustments to make it even more founder friendly than Republic already is. But you know, as a CEO, there's just like a million things every day and 10 million now. So what's like the most important 2 or 3 things I should do every single day on Republic to really make that work? And specifically, I think, this is a second question, I apologize for piling on, but as a social, you know, and a company with a really strong social mission and things that we can give now and people can share now, costs us nothing, and we're trying to get that out to the world. How can we leverage like the good we're doing to get, you know, these small investments that for us is just a huge amount at this time?
Yeah, no, and that's great to hear. Thank you so much, Carol, for even just joining us. I love when there's more Republic people in the house. So a couple of things I would say just to optimize a Republic campaign in general is to really capitalize on our marketing team. So listen to Ben. Ben is our campaign marketing manager. He is top notch and has worked with so many companies already. So he really understands what the playbook is like and how to best make the, you know, how to best optimize from all of this. Just very experienced. He's been with us for over a year now, and he can also give you some sort of cadence in terms of investor updates. Obviously, you don't want to update everyone every single day, but you do want to maybe give like a weekly, bi-weekly update on how you're doing, especially in these times, and create calls to action, right? So whether it's like you're marketing right now, either through your organic channels, LinkedIn, Twitter, and all of that, or maybe you're actually doing ads through like Instagram, Facebook, and all of that, definitely try to create better calls to action that are relevant at this time, because we actually do have some companies, I can't say which ones, but those are that actually have messages that resonate in these times, and then they're just changing all their copy and they're just kind of like going for it. So
Cheryl, can you talk about the attributes of those messages? Like, you can't say specifically what they are, but what they in general do.
Yes, they in general actually pull on the heartstrings of people, right? Because they're small businesses. They're the ones that are around in the area. They're saying, hey, like, we need the community now. We need like people to surround us, especially in these trying times. And, you know, these are also opportunities that in the future, you know, they'd be able to, you know, get a return on, knock on wood. So it's just making sure that people understand through all of this noise that there's still investments that can be made. And so, yeah, so definitely leverage our marketing team, make sure that the copy and everything that you do on social media is relevant. And then, yeah, just overall, I think as long as you stay positive and, you know, communicate with our investor base, I think you should be good. But once again, always listen to Ben.
Yeah, Ben is great. Ben is great. Thank you, Cheryl.
No worries.
Awesome. Kathleen, you want to step up and ask your question?
Unmute. Hi. I was just asking if if you think the landscape is the same for angel investors, or if like when you talk about not being able to raise for, you know, potentially 6-12 months. I've been trying to get a finger on the pulse of angels, but I'm not having, you know, conversations with them right now about giving me their money, but just wondering if you think the landscape will be the same in that world.
Yeah. So there's a mix, right? I think those that are smaller angel investors that generally the majority of their portfolio may be in the public markets, they're probably going to be disproportionately affected. So, you know, whereas they may have been willing to write a dozen $25,000 to $50,000 angel checks a year, they're either putting that on hold or maybe looking over the next year, I'm going to limit that to 3 to 5. So that's like the lower end of the spectrum, where those that can write $5,000, $10,000 up to, let's say, $50,000 checks. Those angel investors that tend to write bigger checks, there are some that can write 100,000 to up to 250,000, and they're generally coming out of family offices or things like that. They're just on pause right now because everyone's waiting to see how this all plays out, and what's going to happen essentially to the public markets, because once again, their portfolio is probably heavily in the public markets, and they want to see what that reallocation looks like. And then also depending on what their business is. So if they're still running their businesses, and their businesses are severely impacted by this, even if they have the capital, their mind space may not even be there. So that's another consideration. But those that can generally write bigger checks, they're on pause, and they'll probably look to open up again in Q3 or Q4. But and it's always difficult to tell. You don't necessarily know someone's net worth. But you know, just trying to gauge, ask certain questions that may not be too probing, but just trying to understand kind of where they are. If you had already started conversations would be good. If you hadn't started conversations yet, I would say hold off on trying to get necessarily an investment right now, but definitely have the conversation about, you know, this is what's going on. Would still love for you to potentially be on board. I'm super cognizant of what's going on right now, so let's keep the conversation going, and would love to check in with you once a month to see, you know, where you're at with what you're doing.
Cool, thank you.
And Winimo, you want to step up and ask your question? Did I say that correctly?
Hi, it's Wenemo.
Wenemo, yes, thank you for the correction.
Oh, no problem. Is my video on?
Yes, ma'am.
Okay. Thank you guys for your tips today. I'm going to try to go back to my question because so many popped up. But I'm kind of at the pre-seed stage, and really just wondering what criteria VC firms are really looking for organizations that are pre-seed. So what should I make sure I have in place before I start to talk to?
Sorry, and what's your company? Sorry, can you just give a quick?
It's called the Healing Schools Project. So I'm more in the social entrepreneurship realm of things, and I think most people on this call. So trying to connect teachers to each other to promote healing in schools for them and their students.
Yeah.
I can take.
Yeah, go
ahead. So for, yes, your sector would be definitely impacted because schools are trying to survive at the moment as well, right? With all these, and ed tech is overall hard to do simply because there's so many like things that, you know, it's hard to really integrate into schools when schools have so many problems as a whole, in terms of how they're funded. So that being said, this might be a great time to start building partnerships. So reaching out to those schools that may not have given you the light of day prior, but this may be a good time to think about all of that, in terms of how to, you know, best position yourself for when, you know, things do and going back to normal and kids do return to school. So think about it in terms of growth strategy, like a long-term growth strategy that way. Think about also in terms of pre-seed level, I'd say, make sure that whatever you do now, like you record it in terms of like your growth and your numbers and all of that, because then when, once again, things go back to normal, you have better sense of, okay, in this time frame, I can go this lean. So just imagine how much more, based off of the capital that I expect to raise, how much more I can grow. And then that's really the need that you need to present to these investors and say, hey, like I did well here, now I can do even more better, better here. But yeah, I mean, I just say this is a time to double down on a foundation. That's kind of, and I know it's kind of vague, and just try to make sure that you are overall in a better position when things do settle.
Yeah. So to add to that, just kind of doubling down on what I said before, it's just going to be super difficult to raise pre-seed funding right now if you don't have either a product or an audience. I think it'd just be difficult for the rest of the year to raise any pre-seed capital. So if you were initially thinking of building some type of technology product and we're trying to raise for those resources, I would say actually change the strategy now and focus on building the brand and the audience. And what I mean by that is, from what I'm hearing, this is specifically a time where I think you could build a really unique brand to really help with that issue. And you can do something as simple as, you know, putting up a website and maybe starting a blog where weekly you're either interviewing, you could do a webinar, right? Or you're interviewing teachers or faculty members and putting out a newsletter every week of like, hey, here's how so-and-so in Wisconsin or so-and-so in Florida is dealing with this issue. And we interviewed these teachers, and really getting, this is, I think, is going to be one of the easiest ways to build a community. If you can start working on that and focus, let's say, the next 3 months on building such a strong core community, whatever technology you decide to build after that, coming into, let's say, the new year, you would have the community to support that. And then I'd say even and alongside that, if you do want to test monetization, I would create something called a Patreon. I don't know if you've heard of it, but it's Patreon. Where essentially, you know, people can pay a it's generally content creatives that are building subscription businesses, like leveraging, whether it's they create podcasts or other, you know, types of information, you know, whether it's videos or whatnot. So if you can figure out a way, all right, what is it that I'm learning from the people I'm talking to during this time that they're really interested in, and I'm launching either webinars or I launch a podcast around that, or I'm putting out relevant content and resources. And then you set up a Patreon that's $5 or $10 a month. And, you know, you're getting people to start supporting that. When you come out of this and you're like, hey, I want to build this network or this platform or, you know, for what I'm trying to build and really build these out. And here's the evidence, you know, that this is something that the world needs or wants. You know, here's my pilot, so to speak. I have this audience, and I've been able to get 100 of these individuals to pay me $5 a month so far. Just essentially building an MVP that I need to really build any software for.
Yeah, that's really, really helpful. I think sort of anecdotally, I've seen the community just building. So creating a platform for it, I think would be helpful. Appreciate that. Thank you.
Definitely will echo, do not pay to build something customized. Oh, I've seen founders do, it's not worth your time. You don't know what your people want right now. I see founders shoot themselves in the foot by doing that. Manuela, you want to step up and ask your question?
Hey, Yvonne.
Hey.
Good to see you again.
You too. Manuel is actually one of our portfolio founders. So
yeah, so I'm not even going to ask you anything. My question is to Republic, actually. And we also have an Open Republic campaign now. So we're on both sides in a way. But I think, you know, there's a few issues with crowdfunding, and this isn't exclusive to Republic. It's exclusive to all platforms that require a minimum. which requires you to really tap into your network, and really getting over that minimum sometimes can be very, very hard, especially in trying times like this. Like, you actually quoted my message, by the way, it was my message, the one of tapping into your community and supporting small businesses, and it has been effective. But how is Republic seeing getting companies over the minimum in these really, really trying times, when even though your community may be wanting to help, they may be cash strapped as well, because they're losing jobs, they're going through what we're seeing that the world is going through? How is Republic willing to help? Because we've been trying our best, but we need some help.
Yeah, no, absolutely. And I completely relate on that side. So in terms of actual investments that we see on a daily and weekly basis, it hasn't gone down significantly just yet. Like, we do expect a slowdown to happen in the next couple of things. So what we've been telling issuers is to kind of extend their campaigns. It is generally, for those of you that might not know, it's generally about 2 to 3 months. And when, last year when we had our, somewhat of a breakout year, that's kind of what we were seeing. However, now that we expect people to be more cash strapped, we are telling people to extend their campaigns so that they give them better runway to get to a minimum. The minimum that Manuela is talking about, by the way, for those over here as well, is that we expect all issuers to raise the first 25K through their community, through their fan base, through those smaller checks that they previously weren't able to collect because there'd be way too many on the cap table. This is a time to do it, because the crowd save allows for everyone to roll up into one line item. And so once we have that 25K, then we open it up to our community in order to fill out, some of the campaign. So that being said, we definitely telling people to extend their campaigns, as I mentioned. I think this is a time, once again.
Can I just jump in here for 1 second about extending your campaign is a little risky, because you also have to reconfirm every investment you've ever received. We've extended and we lost some investments along the past just because you have 5 days for people to confirm their investment, and sometimes people are not even checking that email. They may be using Hotmail or Gmail, which they don't check on a daily basis.
Yes, I mean, I'm not sure how much for it was for yours, and would love to kind of take that one offline. But in terms of what we've seen, we could see like about 5 to 6% of investments do get lost when you have to reconfirm. These are things that we didn't expect to incur when this kind of just all blindsided us, to be honest. So if anything, when we do extend campaigns, and when we do set them up, we generally tell them to do it for longer, and then you can cut it off at any time, right? So that being said, once you do extend it and everything, I think it's a lot about messaging. So once again, being very close with Ben in terms of how you're thinking through things, and you clearly been doing that as well. Just staying top of mind, I think. So taking your company as well and just making it, whether it's ingrained in your website, like whether there's a call to action on your website, a bar, if you have physical products, you're the one that we actually had an issuer that put the opportunity of Republic on their salsa cans. And so people who actually could buy and invest as just a buyer can just scan it and then actually invest through that. So there are just different types of
perfect. Thank you. Sorry for cutting off, but maybe I didn't express myself properly. I feel like the marketing side is super clear, but my question is more addressing to what is Republic doing to offset the effects and to help us out to get over these thresholds, basically.
So Republic is doing several initiatives. One actually, and I can only speak to what I've been working on, just overall, there's several other things that are going on. One is a venture partner program. So we're actually launching with several of our amazing folks, about 20-25 folks that are in VCs. They're also previous founders, are also ecosystem players. So we're actually onboarding them next week. And then what we're doing is then we're going to be bridging them with our portfolio companies, which is super exciting. And it's all based off of that survey that I sent out to our alumni last week. We'll be doing more on that side in April. second thing that we're doing for portfolio companies is also actually rebuilding the Slack and actually creating more of a sense of community, especially in these times. So providing more resources, providing more opportunities that we see in our ecosystem in order to kind of help these companies actually go through. And then I'd say last is, as a company ourselves, we are a startup. So we're also trying to figure out what are the best ways to continuously engage our investors to then help you invest further to get to where your minimum needs to be and then go forward from there. So definitely a lot of investor education. It's a lot of, putting the power back in an investor's hands, especially when people don't feel like they're necessarily in control, in order to really gauge and further assess who they are as a type of investor. And then once they do, they can go and see your opportunity and say, okay, this is a company that I can go behind. So that's kind of like what we've been working on. And I mean, there's so many other folks at Republic as well that are working on really great initiatives.
Okay, thank you. We'd love to be included in all of those initiatives. I'm going to follow up.
Thank you. Appreciate it.
Bye. Thank you.
Then let's do our final question. Shane, do you want to step up and ask it?
Sure. I've got two questions. One is, how do you bridge that balance between being resilient and confident about going to market and your product, and the sort of context where you want to be authentic and vulnerable too, especially being a woman? So that's the first question. The second question is, you referred to breakthrough stars. What in your mind would be sort of the virtues or the criteria of what that would look like today? Thank you.
Sorry, so were you speaking to both of us or to me?
Yeah, no, to both of you. So go for it.
Yeah, no, I mean, I'll just touch on the breakthrough stars part quickly. What I just meant in that area is was similar to what Alex was mentioning about companies that are capitalizing in this environment because they have something that is a need. So I don't know if you saw, but like Soldier Boy, invested in a toilet paper company and now it's like blowing up or something like that, right? And they're clearly like capitalizing, but it's a matter of whether or not they will sustain that growth even after this is all over. And I think he also invested in a soap company, one or the other. Point is that, it's about how are they taking this time to not only grow, but then also figure out a strategy that allows them to stay relevant, I think is really key. And then other breakout stars are even just those that have called attention to an area where nobody was really looking. So, or like that people didn't really take seriously until now, because everyone is feeling how the future of work is changing. And so those are types of companies where now there's a larger magnifying glass where people are really giving it a second look. And that second look is powerful because then when, investors really truly invest in sort of sometimes like their experiences and how they feel about a product. Once again, it's more of an art than a science, but that's definitely something that I think will resonate. And so that's what I meant by breakout stars.
Yeah.
Thank you.
And Shane, could you actually repeat your first question? I want to make sure like I can approach it correctly.
Yeah, I mean, I think that there's that piece where you're confident about your product and its relevance and so forth. So, you can speak your truth to that. But right now, obviously, everyone is feeling vulnerable because of the environment around us. So, like you were saying, people have to make sense of what you're talking about, so that it resonates. I'm just trying to kind of gauge that, because especially being a woman and then being a woman of color, you tend to be a little bit more authentic anyway. So you're not that person that's walking in, expanding and saying, I'm the next best thing for Corona.
Yeah, so it's interesting. I would actually leverage that as the superpower, right? Like the idea is in this time, like the big superpower is empathy. Like having empathy for everyone in the world right now, whether it's for the health circumstances, for family circumstances, for economic circumstances, for business circumstances, being able to, I think the real superpower is being able to like leverage that and in the way you communicate with whether it's going to be a customer or a potential investor, or maybe, you know, you now have some capital and there's a ton of employees that have now been laid off at other companies, and it's your time to be able to hire some new people. It's being able to have that empathy for, hey, I understand what you're going through. I understand your viewpoint of the world and where you sit. You know, and I'm cognizant of that, and I'm communicating with you in that way. And also, you know, I want to be clear about, at the end of the day, this is what I'm working on. This is what I'm building. This is the value I'm adding to the world. And it's unfortunate that we're in this time, but I think I'm now more prepared to be able to take this thing to the next level, or, you know, put this thing out in the world and test it to see if I can then take it to the next level. Right. So it's one side is the actual like product and the business. And that's the difficult thing, right? It's like, you know, you don't want to act like you don't have empathy, but you got to talk about your business. I mean, you have to deal with the business, right? Like, that's just the truth of the matter. And I think a lot of people don't want to live in that reality, but it is a reality, right? You're building a business. You're going to need that business to sustain and grow. And if you feel as though, you know, you're at a point where you can explain very well the value your product's adding to the market and show, you know, how you're going to continue to develop over the next 1 month, 3, 6 months, you need to tell that story, right? Because like at the end of the day, we're going to come out of this. And if you focus so much on others' feelings or emotions, or care too much about the empathy, then it's like, why did you even communicate with me in the first place, right? So make sure like you're on top of what your business is, and you have that confidence of like, I'm building some legit shit that's going to take me to the next level. But I'm also cognizant of the fact that we're in a world where this may not be top of mind for you or be the most important thing on your mind. So let's just keep building that relationship, or let me prove this to you over the next 3 to 6 months. You know, but being able to manage the two, it is a difficult thing, but it's the reality everybody's dealing with right now, and people will understand at the end of the day, as long as you have that empathy to understand where they're coming from.
Thank you.
Drop them gems, y'all. Well, I want to be mindful of our amazing expert time. Thank you so much, Yvonne and Cheryl.
Yes.
What is the best way for these founders to stay connected and get in touch?
I will drop my my email, which is cheryl@republic.co, and then I will also drop my Twitter, because you can find me there at CY.
All investors or investor related on Twitter, y'all.
I'm just trying to support as much as I can. I used to be more active on LinkedIn, so you can also definitely connect with me there. But yeah, definitely trying to support as many founders as possible, especially in this trying times. And yeah, best of luck to all of you. I mean, you're in great hands as well with Alex. Her accelerator is, you know, top notch, and, you know, just especially coming from a previous founder, we all have immense respect for her. So you're in great hands.
Thank you.
Yeah. And you could actually reach out to us. I think Alex put it in the description on our website. I know people say that all the time. We actually like are active more with people that reach out to us through our website. And we actually are doing office hours every Friday over the next month or two, because we know founders are going through a lot. So you can actually check out office hours on our website as well. And then just hit us up and send a message, and we will definitely get back to you. I'm actually the anti like Twitter VC. I'm more of a voyeur on there. I don't really interact much. So don't hit me up on Twitter. And my LinkedIn is like pretty sporadic. So our website is the best way.
I want to support your office hours. You got to give me something, like a link to put on. What? Let me support you.
Yvonne's so antisocial.
He's thriving in these times. He's like, it's okay. My life is quarantine anyway.
Well, thank you all so much. Tomorrow, we're still continuing with Female Founder Support Week. Tomorrow is all about selling with compassion and hitting revenue goals. We have amazing experts. One of our other friends who's part of the squad, Chase Emmanuel from Carta. We have Jessica Magok, who has literally scaled revenue from 0 to 100 million in 3 years. And then also my friend Jason Bay, who is literally a prospect genius in terms of finding new leads, especially in this environment, having empathy. And then we're gonna end it off with self-care. So we will see you all in the next couple of days, but until then, enjoy the rest of your day. Thanks, everyone.
Thanks,
Thank
guys.
you. Have a good day, guys. Bye.
Bye.